What's up, investors? It's the Russian dude. Let's really quickly talk about what exactly Jerome Powell said during most recent Federal Reserve meeting, and the statements which were made can severely and most likely will affect the stock market in the near future. And to begin with, first of all, it has been mentioned that the fight against inflation at this point, it is almost came to a dead end. The inflation is simply not budging, and in some particular sectors and industries, it has been reported that inflation started rising once again, which shows you that the Federal Reserve, one of its main activities, which is keeping in balance the interest rates and the inflation, well, they are failing at their job, to say the least. And because the inflation right now is higher than it's supposed to be, at this very moment Federal Reserve declines to start reducing the interest rates. So as a result, we have a kind of lose-lose scenario. We have high inflation and high interest rates for an extended period of time. At the same time, it has also been mentioned that the labor market is extremely strong right now, which at first might sound like, well, everyone has a job. There's not that much unemployment, so what's so bad about it? But as you can see from this graph, the employment costs, they also start increasing along with the salaries, which also contributes towards the inflation. This is one of the sectors of the economy where we can see the increase in the inflation once again recently. And as a result of this, for the sixth time in a row, the Federal Reserve decided to keep the interest rates at current levels of 5 to 5.5%, which remains unchanged since 2023. Besides that, the reduction of the balance sheet has been slowed down significantly from $60 billion per month to $25 billion per month, and as a result of all of this, Jerome Powell said that he does not see much promise that the interest rates will be decreasing this year, or maybe one time just maximum. He even briefly and subconsciously mentioned that there is a possibility to even start increasing the interest rates. In the very beginning of the press conference, where Jerome Powell did mention that the interest rates will not be increased, this was pretty much the worst fear for the stock market. That is why temporarily we saw that the S&P 500 went up by as much as 1.5%. But by the end of the trading day, it pretty much flatlined, coming back to exactly the same levels when the market just opened. And now, according to these so-called smart money institutional investors, hedge funds, they do expect that if the reduction of the interest rates do happen this year, the very earliest it can happen is approximately in September. And some people even claim that one of the biggest reasons why they can start decreasing the interest rates, even though the inflation might still remain relatively high, it is because of the US debt situation. You already know that it is a pretty much catastrophe at this point. Just go ahead and watch some of my previous videos. We're talking in much details about this particular situation. But basically, in just a very short summary, high interest rates means that the monthly debt payments, maintenance of the debt, costs a lot of money to the US budget. So they might sacrifice inflation, they might sacrifice other industries and sectors of the economy in favor of trying not to let US debt to be completely out of control. And to sum it all up, here is what we have at this very moment. The inflation is not budging. It even started rising up once again in particular sectors and industries. Because of this, the interest rates will be frozen at current levels, as they are already staying this high since 2023. There is not that much talk about reducing them. There was even a mention, a small glance about increasing potentially the interest rates once again. There was a temporary optimism on the stock market. The S&P 500 went up, but it lost all of its growth by the end of the trading day. And just in general, stocks were declining in the second half of the day, especially those sectors and industries which are directly related, which are directly influenced by the high interest rates, such as technological sector. And ultimately, it is expected that a massive pivot will be done in the near future, because we did start this year pretty dovish. Pretty much the interest rates were expected to go down, the inflation was supposed to go down, nothing of this is much much happening anymore. And now we are pretty much in the completely opposite scenario. The inflation is climbing up slowly but surely, and the interest rates, at least they will remain high, they might go higher even more. Guys, if you did find this information useful, please subscribe to my channel and like this video. I'm making these news updates at this point daily, and you're more than welcome in our small community. Thank you so much. See you tomorrow.